Citigroup is calling attention to unstoppable trends that investors need to consider to future-proof their portfolios. Here to explain is Citi Private Bank Global Head Ida Liu.
Hi, Jack. Thanks for having me.
Thank you for coming into the studio. It's great to have you here. I want to get to these unstoppable trends, but first, in this 2023 report that you guys have put out, a couple of statistics really caught my eye. And one was the prediction that global growth, not just U.S., but global growth would be at 1.7%. You say that you've bumped that up to 2%, but that's still really slow by historical standards.
No, it is. I mean, it's 40-year lows in terms of global growth, right outside of the pandemic and the financial crisis, but extraordinarily low global growth. We bumped that up a little bit to 2% because of the reopening of China, some positivity in the European region as well. But overall, it's going to be a tough and very volatile year for investors, right? I mean, we had 7 rate hikes last year. We've had a couple already. We expect another one coming up shortly. But we are going to reach peak rates this year, and we expect some steadying and then decreasing of the rates towards the end of this year into next year. You know, so when you reach peak rates, recession and inflation,
is recession part of your base case?
It is, Jack. It is, and we believe that we're going to hit the recessionary period either this quarter or next quarter. And as you know, markets don't tend to bottom until the midpoint in a recessionary environment. So a lot of volatility still yet to come. And, you know, you've seen the inflation come down from 9.1% peak in June last year, obviously now to 5% last month. We project 3.5% by the end of this year.
Yeah, that 5% number, I think, is year over year. If you look month over month, it's already slowed a little bit. And in fitting with all of that is your prediction, or your economist's prediction, of 3% 10-year Treasury yields by the end of the year, which suggests that now's a pretty good time to be, you know, adding to that bond portfolio.
Yes, it is. And that's been a call that we've been making for our clients, and something that our clients have been doing is taking advantage of this high yields in the fixed income side of the business and adding to their portfolios in short-term duration fixed income, municipals, treasuries, you name it.
Your clients tend to be wealthy. Municipals looking really attractive right now because of that after-tax equivalent yield.
Absolutely. You're looking at high single digits there, 7.5%, 8% on high-quality munis.
We could do this all day, but I do want to talk about unstoppable trends. One which is both obvious and not so obvious, geopolitical tension globally, especially that China-U.S. relationship. We know that, but how should investors be responding?
Well, U.S. and China continue to bifurcate. The relationship continues to be very challenged. But as a result of this bifurcation of the G2 powerhouses, we'll say, is a lot of beneficiaries of that, right, including different trading flows and different trading partners that we're seeing. You're going to see India be a beneficiary. You're going to see countries in Southeast Asia benefit from this bifurcation. And on the U.S. side, Mexico and Brazil. So for global-minded investors, you have to think about diversification. You've got to think about areas that are going to be pockets for opportunities geographically, and to get some exposure in your portfolios. And
after 10 great years in the U.S., I know you're recommending that investors boost their international exposure. Is that right?
That's correct. We've had a 10-year bull market. We've got to make sure that we're making some strategic pivots in the portfolio. Some of the things that we've been doing, you've already talked about, which is fixed income exposure, shifting to high-quality dividend-paying stocks as well, adding some private equity and alternatives exposure, and then, of course, taking advantage of some of the unstoppable trends that we're seeing for investors as well.
Another unstoppable trend is energy security. Again, we're all kind of aware of that, but you have an interesting take on what investors should be doing as a result.
Yeah, well, there is no doubt that the transition from fossil fuels to clean energy is here to stay. There's a lot of opportunities as that transition takes place, including clean energy transition companies, technology companies, battery storage, EV type opportunities as well. So we're playing that spectrum for our clients as well, investing in the clean energy transition. But this is not going to be a quick change. It's going to be a strategic one over a period of time, but one that we see a lot of growth in the clean energy transition area.
Yeah, you pointed out, for instance, that natural gas will be here for a long time.
Yes, it will.
But one more before you leave, and that is this idea of digitization. We saw this huge acceleration in COVID, and now it looks like some of those companies have been left for dead, but I think you're taking a longer view.
We think that there is a huge opportunity in the digitization, particularly in the deep tech and the AI space. So we love AI, we love robotics, we love cyber. In fact, all around the world, all the CEOs that I speak to, what's top 3 on their mind? Cyber is always in that top 3 category of future spending. Cybersecurity in that top 3, and that industry is going to continue to grow over time. And this whole entire digitization is all fueled by the semiconductor industry. So let's not forget the brains behind all of that. We think is going to continue to be an incredible opportunity for investors in the long term.
That's the engine. Ida Liu, we could go on for hours. Unfortunately, we've got to end it there. But thank you so much for coming by.
Sure. Thank you, Jack. Thanks for having me.
Certainly.
Thank you.